Why I stopped trading stocks and options, do this instead. What if I told you that you could day trade with $50,000 or even $150,000, but risk absolutely $0 of your own hard-earned cash? Look, if you're trying to build wealth trading, you've probably realized the system is rigged against the little guy. You either need a massive bankroll to trade stocks or a PhD in math to understand options. But there's a third way, a cheat code that professional traders use every single day to leverage massive capital without risking their own rent money. Today, I'm breaking down stocks versus options versus futures, and I'm going to reveal exactly why trading futures using prop firms is the absolute best way for regular people to get funded and get profitable. Please click that like button and let's dive in. Level 1, stocks. Alright, let's start with the basics. Stocks. When you buy a stock, you are buying a tiny literal piece of a company. If Apple sells more iPhones, the company becomes more valuable and your slice of the pie goes up. The pros, it's simple. It's easy to understand. You buy low, you sell high. The cons, it is incredibly capital intensive. If you want to make $100 on a 1% move in Apple stock, you need $10,000 just sitting in your account. Plus, if you have less than $25,000, you are handcuffed by the PDT rule, the pattern day trader rule, meaning you can only make 3-day trades every 5 days. It's slow, it requires a massive bankroll, and it ties up your money. Section 3, Level 2, Options. So, traders get bored of stocks, although I admit I buy and hold in my own portfolio for long-term wealth building in my retirement accounts. But for this, let's move to Level 2. Options? An option is exactly what it sounds like. It's a contract that gives you the option, but not the obligation, to buy or sell a stock at a specific price by a specific date. The pros: incredible leverage. You can control 100 shares of a $200 stock for just a few $100. If the stock explodes, your option can go up 100%, 200%, or even 500% in a day. The cons: you aren't just fighting the direction of the market, you are fighting time. Options have an expiration date. Every single day you hold it, it loses value thanks to something called Theta, or time decay. You can be 100% right about the direction a stock is going, but if it takes too long to get there, you still lose money. It's frustrating, complicated, and heavily manipulated by market makers. Level 3. Futures, the sweet spot. Which brings us to the holy grail of day trading. Futures, a futures contract is an agreement to buy or sell an asset, like the S&P 500, gold, or oil, at a set price on a future date. But as day traders, we don't care about taking delivery of barrels of oil. We are just trading the price action. Here is why futures are the undisputed king. No PDT rule. You can trade with $1,000 and take 50 trades a day if you want to. No $25K requirement, no time decay. Unlike options, there's no theta eating away your profits while you wait for a move. Pure price action. If the market goes up, you make money. If it goes down, you make money. It's pure, simple, directional trading. Massive leverage. You can control a massive amount of the market with a tiny amount of margin. But wait, leverage is a double-edged sword, right? If you use your own money, one bad trade can wipe you out. And that is why we don't use our own money. The cheat code: prop firms. Enter the prop firm. Prop stands for proprietary trading firm. Here is how it works. A prop firm is a company that has millions of dollars in capital. They are looking for profitable traders to trade their money. Instead of saving up $50,000 of your own cash to trade, you go to a prop firm and pay a small fee, usually like $50 to $150, to take an evaluation. It's basically a tryout. They put you in a simulator with a set of rules, hit a specific profit target, and don't hit the max loss limit. If you pass the evaluation, you are funded. They hand you a real live account with their money. You trade it. You keep the first $10,000 you make, and after that, you keep 90% of your profits. If you blow the account, you lose the firm's money, not yours. Your downside risk is strictly capped at that $50 evaluation fee you paid. Combining futures with prop firms completely flips the script. You get the pure, simple price action of futures. You get the massive leverage, but you completely remove the psychological burden of losing your own hard-earned savings. It forces you to learn risk management, and it scales your earning potential to the moon. Look, trading isn't easy. Passing a prop firm evaluation takes real screen time, discipline, and a solid strategy. But if you're going to put in the work to learn a skill, learn the one that lets you leverage OPM, other people's money. If you found this helpful, make sure to like the video, subscribe to Ben Stock Trades, and turn on notifications so you don't miss future trading tutorials. Please feel free to also comment if there is a subject you would like me to make videos about in the future. Thanks for watching, and I'll see you in the next video. Stay green. Happy trading.